Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell, and returning on the program with us for a Sprott monthly market update with Palisade is none other than Rick Rule. Rick, welcome back to the program.
Thanks, Colin. Nice to be with you.
Before I start, I just want to mention the Sprott conference, which most of our listeners are aware of. I think it's one of the best conferences, or the best conference that's put on each year, and that's going on July 25th until the 28th. The reason I like it so much is there's not people selling stuff to you there. It's real investors going around that want to meet and discuss everything mining, and it was a real fun time and a very good exercise in business and investment. So, Rick, if you have anything else to mention on that, I know the website is sprottconference.com.
Well, I certainly look forward to seeing you at the conference, Colin. We've worked very hard this year following on a successful conference last year. We'll have a great range of speakers. An example would be David Stockman, former Office of Management and Budget Director under Reagan, talking about the impact of politics on your investment. We'll have Jim Rickards, a real Wall Street insider. You may remember that he was general counsel for long-term capital management when they damn near brought down Wall Street. He saw what was wrong with Wall Street from the inside. Former Senator and Energy Secretary Spencer Abraham, talking about the global politics of energy. Nobody knows it better than him, former energy secretary under Bush. Of course, speakers like Doug Casey. But importantly, it isn't just gurus. We will have the heads of many large mining companies, people who built the companies themselves, though, not the sort of suits who take over afterwards, talking about the process of building their companies and explain to investors how that process is important for investors to find small $10 million market cap companies that become $5 billion companies. We'll have, of course, Robert Friedland, the most serially successful mining entrepreneur of my generation. And there will be, as you mentioned, about 1,000 high net worth investors in attendance. The chance to learn from each other is important. And one more thing, Colin, I think that really sets our conference aside. At almost every investment conference that I speak at, and I speak at dozens, the primary qualification to be an exhibitor is to have a pulse and a check that cashes, normally in reverse order. At the Sprott conference, every public company exhibitor has to be owned in a Sprott managed account. That doesn't guarantee that every stock will go up, but it guarantees that every exhibitor has been vetted. And John Kaiser, a letter writer whom I believe you know well, has done some empirical work over time to show that carefully vetted portfolios like the ones made up of our exhibitors substantially outperform the underlying market over time. If that isn't enough, I'll take the risk out of it for your listeners. If you sign up for the conference at sprottconference.com, and for any reason you're unsatisfied, I'll refund your purchase price myself.
Doesn't get much better than that. Rick, you also speak each year at a Liberty conference. I think Giant Bhandari puts that on in Vancouver. And I was thinking from a comical perspective, a great way to explain how fiat currency works might be to explain how junior mining companies work. And there's this constant financing where new paper is created out of thin air, and there's overpaid bureaucrats or CEOs, and the only difference is that junior mining stocks that act this way seem to get pummeled by the market, and yet fiat currencies are not getting pummeled by the market right now, which I find very strange and hard to explain.
Well, you said a lot of interesting things there, Colin. The first is, of course, an indirect tout for capitalism and morality. And people who care about those topics, I do, would be well advised after my conference to attend Capitalism and Morality. You should go to their website. For people who have a free market, Austrian or libertarian orientation, it's just 2 days of mind candy. It's fantastic. Your second point, which makes me laugh, is the fact that although many people who invest in junior mining shares complain about the printing of worthless currency, the truth is that the private sector always outcompetes the public sector, and the Canadian dealer network can seemingly pump out more phony share certificates than the Fed can pump out phony dollar bills. But as you say, on the private side with the market, there's a self-correcting mechanism. where those phony mining companies either go to zero or convert to marijuana companies. Um, I appreciate your message, and I hope your listeners take it to heart.
Yeah, well, Rick, have you ever witnessed a situation in your 4 bull markets that you've lived through and worked through where the commodities became so mispriced against the S&P? I saw a chart the other day. Somebody called it the alligator jaws, where you have the S&P 500 continuing to climb, and the commodities, which you could claim have bottomed or are bottoming, seem to be as far away from that S&P line as they ever have been. And it's a very interesting place to be a resource investor if you have any capital left right now.
Well, I think that's accurate. The truth is that you make money, as Buffett said, by being brave when other people are afraid and afraid when other people are brave. The world with regards to the S&P 500, and it's important to note, particularly the large capitalization technology stocks that have outperformed the rest of the S&P 500, has everybody pretty brave. And the resource stocks have everybody pretty afraid. The truth is that most people just regard themselves as contrarians. They aren't, in fact, contrarians. As we've noted on your show in the past, most people's expectation of the future is set by their experience in the immediate past. And people's experience in the immediate past in general market securities has been at least okay and has been spectacular if they're in the large cap tech stocks. Whereas people's experience in the immediate past, and by immediate now I'm talking about the last 6 months, in resource stocks has been relatively painful. Now, we have other people in the resource sector, people who have experienced numerous boom and bust declines, who understand that for the better natural resource stocks, the market is really a matter of time. It's a when question. And I like to counsel younger speculators that asking yourself a question where the answer begins with when, not if. In other words, it's going to occur. You just don't know when. Those end up being fairly high quality questions. And I'm sure that this current market that we're in will be no exception.
Rick, when you came on 5 weeks ago, you mentioned that the prices and the bearishness in the mining sector had you very excited. And I imagine that you've become even more excited now as things have continued to go sideways and down. I noticed that you launched a new general limited partnership, much like the one that was very successful in the last cycle, where you're putting some money together, and I assume you'll be participating in private placements. I don't know if you're able to discuss that here, but if not, just talking about how you feel about the market would be great.
Well, I'm able to discuss it in a very general sense. We're putting together a partnership for accredited investors only. And those investors must be existing clients of Sprott. The purpose of the partnership is fairly unique. All of my prior partnerships have been constructed primarily around private placement investments, where I've negotiated private placement investments into companies, contributing capital to answer some unanswered catalytic question. This new partnership will be, from my point of view, unique in that it will at least attempt to focus on rights offerings. A rights offering, for those of your listeners who don't know, involve a funding technique where a company needs to raise equity, catalytic capital, but they believe their shares are deeply underpriced. The consequence of that is that they give their existing shareholders the opportunity to do the financing, often at discounts to current prices. The reason that rights offerings aren't more common is that oftentimes companies that are undervalued have a depressed shareholder base, and the management teams are concerned that they will have the embarrassment and the cost of a failed offering. And so what we do is we go in and guarantee that the rights offering or some portion of the rights offering will succeed. We make it much more riskless to managers. We believe that management teams that have a feeling, have a kind regard for their existing shareholders and care about the dilution that their shareholders will suffer, will be more responsibly disposed towards their new shareholders too. So we believe that rights offerings are at once the fairest way to attract capital, but also reflect positively on managements that care about the dilution to their existing shareholders. So I'm pretty excited about this partnership, and I of course, am very excited about that financing mechanism. It's fairly commonplace particularly in the Australian marketplace, but also the London marketplace. And we're hoping to make it a more acceptable funding vehicle in both Canada and the United States.
And correct me if I'm wrong, but with a private placement, you can price at a discount of roughly 25% to market. With a rights offering, you could, in theory, price a rights offering as low as a penny, even if the stock is at 10 cents. Is that correct?
That is correct. The test is mostly full and fair disclosure. Now, it's unlikely that you would see a rights offering take place at a greater than 50% discount to the current share price, although we note that Sibanye just got off a very large rights offering at a 40% discount to its prior market capitalization.
Very good. Well, Rick, I want to circle back to the market a bit. Volatility is at a historic low right now. I read somewhere that in the last 25 years, the VIX has only traded under 10 in something like 20 market days, 10 of which have been in the last 30 days. And what happens in your experience when volatility gets to this kind of low? Does it signal that something bad is about to happen, or does it mean nothing at all?
Colin, I'm treading on thin ice answering that question. In 40 years of investment experience, I have never observed a lack of volatility in the major markets like we're seeing today. And it's frankly perplexing to me. One would suggest that a global economy with both the challenges and the opportunities in front of it that we see today would be much more volatile. When I look at the global economy, I see a bunch of very large weather systems colliding with each other. The only thing I can think of, Colin, and I'm making this up, I'm a credit analyst, not an economist. The only thing I can think of is that the incredible amount of liquidity in the system, the central bank liquidity in the system in particular, has acted as a sort of a soporific, a sleeping pill, and kept people calm. When I look particularly at collective balance sheets, federal, state, and local governments around the world, underfunded pension liabilities, I am not particularly sanguine. On the other hand, when I look at the liquidity that we see in capital markets and the incredible liquidity that we see in the bond market, I understand that a liquidity-driven event, in the absence of a collapse in confidence, should that occur, would seem to be far away. That notwithstanding, I'm acting as though the world is going to get volatile anyway. I'm retaining very large cash balances, and I hope I'm wrong.
All right, very good. Well, I'm going to end with one last question. Everybody has been complaining in my listener base that I'm not talking about uranium enough these days as prices have fallen back down. So we had David Cates on last week, and he didn't have too much to reveal aside from the fact that we're back to bearish sentiment. Do you have anything to add to that story?
Near term, we're looking at very bearish sentiment. I don't know if you saw the recent news out of South Korea, where the newly elected head of government in South Korea is advocating a policy of shutting down domestic nuclear production in South Korea. I don't know if that will be politically acceptable in South Korea, and I don't know what it is that they will use as an alternative to uranium. Certainly, historically, Korean Electric Power has been a very large outbound investor in uranium projects worldwide and a source of stability in the uranium market. And in fact, Korean technology in terms of new plant construction around the world, but particularly in the Persian Gulf, has been very important. But the decision by the new leader of South Korea to publicly state that South Korea should and will shut down their nuclear capacity is, at least in the near term, quite troubling.
Agreed. Well, Rick, thank you so much for coming back on the program. Once again, for listeners interested in participating at the Sprott conference, which is July 25th until the 28th, just go to sprottconference.com. And Rick, I will see you there in a little over a month.
Colin, I look forward to seeing you. Thank you. think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?